My name is Hugh Hendry, and I ran a global macro hedge fund for 15 years. This is an exclusive insight into my journey, what I did, and more importantly, why. And I promise you, it's not what you're expecting.
Good afternoon, good evening, good morning, wherever you are. Welcome to Confessions Part 17 with me, your co-host, Chris Sweeney. I'm joined, he's still in London, he's left his St. Bart's lair, the hedge fund pirate himself, Hugh Hendry. How are we?
Chris, I'm slowly recovering. I really have to review my travel arrangements. When I feel like I travel from Mars, I noticed that Elon Musk was saying that in the initial maiden voyages, we'll probably lose a few intrepid souls on the way, and I fear that my how would you say my re-emergence, my re-entry,
re-entry,
into normal life. One of these times I'm not going to make it. I travel economy. I am that cheap. I do. But for the nighttime flight, and I get a seat where there's a wall behind you, and I go on and I take a couple of pills, a couple of glasses of red wine, and then it's sayonara. I fear one of these times I'm not going to wake up.
Well, if you're ever on a flight with Hugh, if anyone does on a flight with him, give him a shake. And if you've got like a transatlantic flight, you've got 7 hours of a macro legend to ask him all about trades and what you should be investing in, and can pull up your portfolio and let him dissect it for you. You know, I'm sure he'd love that, wouldn't you?
For a daytime flight, absolutely. If you dare interfere with me during the night, you've got something coming. Anyway.
Well, today we're going to delve in. We left you at the end of last episode, end of the year 2004. So we're going to start 2005 today. It's the year of the rooster. It was also the launch of the largest commercial jet, talking about flying the Airbus A380. And also this year, we just had the Oscars, so I thought I would tell you, in this year, Clint Eastwood's $1 Million Baby was the best picture.
Great.
So that sets a bit of the scene for 2005 as on this episode. We'll start with our 3 songs. We're going to be talking about banks, so it's all about money. The songs are all themed around money, which is, I guess, for our purposes, pretty predictable on this podcast. First one, ABBA's Money, Money, Money from 1976. 1985, Money for Nothing by Dire Straits. Or the third choice, AC/DC's 1990 classic Money Talks. Which one, Hugh, would you be listening to as the hedge fund manager of 2005?
Chris, again, your selection always leaves
come on.
me.
You can't say they're not well known. ABBA, AC/DC and Dire Straits, you know them. You can't say they're niche.
I know AC/DC by name and by reputation, but I struggle to identify their song. And that reflects...
Highway to Hell.
Okay, yeah. But
Back in Black.
Highway to Hell, yeah, I get it. But even then, I was thinking that was more. Who was that big kind of heavy guy who did?
Meatloaf.
Meatloaf. I kind of get confused a little bit. Just in terms of, but the song title's a little bit like that. And when I'm perplexed is how you could omit the winner.
Okay, the winner. Here he goes again. He's not choosing. He's doing his own thing. He's eclectic by nature, eclectic by DNA. He's refusing to choose one of the 3. Okay, what would you be listening to then?
Otherwise, there was a grumpy mother. but the Floyd, money, boom, 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 boom.
I know you like Pink Floyd. I thought that was too obvious. I know you like Pink Floyd. I thought that'd be too obvious.
Let's go for Dire Straits, which is odd, but it allows me the Branson biography. I believe it's autobiography. Richard Branson autobiography, which is Losing My Virginity, cute title, and which is pretty much his rise to. And the intrigue. We mentioned Stanley Yeletnikoff, I believe, last week, who was this record mogul with I think it was CBS Records in the US. And so Tricky Dicky, Mr. Branson, obviously had the eponymous Virgin Records. And he tells a wonderful story of trying to sign Mark Knopfler and Dire Straits. And it struck a chord for two reasons, because he took Mark to a Greek restaurant, which was just round the corner from my office. This kind of, it was a former atelier. I think it literally been some very small factory, like inner city factory, which had subsequently been reclaimed and tarted up by Guy Ritchie, the film director. But round the corner was this kind of grubby looking Greek restaurant that you would pass just off Queensway, full of cheap non-entity kind of places that you would never consider eating in. And that would be a mistake. Queensway, I'm sure you know, is renowned for its Chinese restaurants. And Richard thought this would impress them, like not being flash. And it worked in the opposite. There's something very cute, which I'm forgetting. If we rehearse this out, I'd really be able to nail it. But Knopfler in his biography, like, just treated me like I was a numbskull, and like all I deserved was some crappy falafel or whatever, I was like 2 fingers to Richard, and he missed out on money.
That's pretty cool. Actually, I never knew that. That's a nice story. That is a nice story.
Have you read that book?
I've read one of Richard Branson's books. I don't know which one I've read, because he's got a couple, as you know. I think I
don't know. He's only got one biography, as far as I understand.
I think I might have read The Sweet. Is it A Sweet Smell of Success? The Sweet Something of Success. But there's also a book by, is it Tom Boer, who does a lot of these biographies, but not with the person, and he's quite brutal and takes him down, and and says that Branson's basically a bit of a snake oil. I'm paraphrasing, but yes, the impression I got from it that he was a bit of a snake oil salesman, that he kind of he uses the branding, but he's maybe not that great a business person deep down, and some money stuff, and it's not a flattering portrayal, I wouldn't say.
But who sells all their assets to buy an airline or to run an airline? Is that how do you, what's this an expression? How do you become poor, start as a multimillionaire and buy an airline?
Yeah. How'd you make a small fortune? Start with a large one and buy an airline.
There you go. Thank you. And I tell you another thing. His island. What's the name of his island?
Necker.
I got a buddy, and he was fleeing COVID, and he ended up in the British Virgin Islands, which is not far away from my roost, being the year of the rooster. See, this is all sinking, Chris.
Yeah, it's lovely.
In St. Bart's. And he was snapping some pictures, like, oh, look, that's Necker. And not impressed at all. It's this little dinky-rinky island, but it's too close to the BVI, which I'm afraid of. I mean, everything in the Caribbean sucks. I do not like the Caribbean. You're like, but you live in the Caribbean. I don't. I live in a kind of outpost of Europe. I live in Saint-Tropez in the Caribbean. We've got perimeter walls. Really unimpressed. But anyway, let's move on.
He's got another island as well, which I think you can actually stay at. I think Necker, you've got to be invited, but he's got another one where I think you can book it out and all that kind of stuff. Anyway,
I thought Necker was the one. He just prostitutes everything. Necker's the place you get to stay on.
No, I think Necker's only for his guests. I think you've got to be invited to Necker. I don't know if you can book it. His guest is called Mr. Dollar Bill. Well, he had Barack Obama there. Not long after he left. I'm not sure what I think about Richard. I'm not sure, but his wife is from our city, so maybe we should. He's one of us, really, isn't he? Deep down.
I mean, again, this tribal.
His wife is
your city. My city is Gustavia.
No, your city's
the enclave of St. Bart's.
Born and bred in Glasgow, my friend. Born and bred.
Born and fled, FLED. Anyway.
Okay, fair play. Anyway, I was going to ask you today, a quick bit of news was Sony, which I thought was quite interesting, maybe linking on from they also have a record company, but they've just released their biggest ever net profit, $10.7 billion. Now, with COVID and everything going down, are you surprised about that for such a big company to have the biggest ever mean, it's a huge corporation. If it's biggest ever net profit.
I am not surprised at all because, okay. I guess you can see my bar charts, yeah?
Yes, Sony Group Corporation. We can see it up on the screen.
And Chris, a message to you and really to me, I'm going to call bar charts and say they should be sponsoring this program. I'm also going to call Market Screener.
Right.
And maybe we'll discuss this later. But and again, they are not paying me, folks, to say this. They should be paying me to say this. But I ended up subscribing to the service. I paid about £200-300 for an annual subscription yesterday because I discovered that the number of charts that you could pull up on any one day was limited, and my creative thing was overflowing yesterday, and we'll probably reflect upon that as we go on. And thank you, everyone, for advising us that we should persist with the kind of the full length of these things. Much appreciated. So why Market Screener? Why paying up? Because and why not bar charts? It's a more comprehensive stock universe, which allows me, for instance, to pull up the Japanese listed Sony Group. And I wanted, in answer to this, several facets to answering your question. But yeah, I've got a fascination for all the data. So in this context, it's 30 years. And my chart is disfigured by a picture of me, so let me move me. So Chris, I hope, can you just confirm you can see the price of Sony on the screen?
We can see it all 30 years, yeah.
And what I want to reflect upon is this point down here, which is January 2013. And Sony was trading, I guess let's call that 750 Japanese yen. And here we are, no more than 8 years later, and it's trading at 11,000, Chris. Right? It's gone up, what is that, 12, 13, 14 times. And I want to say to you that my esteemed colleague, my stock market brain, Mr. Lee, and we had fun because we had big positions back in this period, 2013, when we had this, I thought China was going to blow up, and I had bought lots of CDS, credit default protection securities against Korean and Japanese steel. And again, we're going to talk about steel later on. And we go to Korea, and it'd be Mr. Lee. This is my colleague, Mr. Lee, Lee being the founding family of Samsung, and everyone in Korea is called Lee. But Mr. Lee is Mr. George Lee from Manchester. And there's not an ounce of Korean DNA in Mr. George Lee. But anyway, George is, I owe so much of my success to George's patience and great intellect. And he actually visited in Tokyo, Sony. Now, I have to tell you, visiting Japanese companies back in the day, you'd fly all the way to Tokyo. And the only good thing about it was you could go business class with Virgin. You could, in 12 hours, and get a proper good kip, watch a good movie, have a fine meal. Really excellent. And stay at a wonderful hotel. In terms of visiting the companies and expanding your knowledge, complete waste of time. Japanese companies, they would send in an old codger who would like chain smoke with his yellow fingers, and he'd be sometimes with an interpreter. You had to bring an interpreter to the meeting. You'd ask a question, your interpreter would translate it. The doddery old guy would would be asleep, and he'd wake up, he'd say something, then his translator would relay it back, and they just wouldn't answer questions. They just didn't give a shit. Yeah. And believe me, my behavior in those meetings was diabolical. I mean, I would ask random questions like, did you meet a prostitute last night? And the translator would be like, I can't answer that question. just why not? I don't think I asked that question, to be honest, but random kind of obscenities. Anyway, Mr. Lee visited Sony, and they wheeled out an English-speaking, a guy, I think they call it Gaijin, a Westerner. And this mother maintained the same nonsense, just like stonewalled and spoke a lot of nonsense. Didn't give a shit. So it was just, and Sony was the worst company in the world. And in answer to your question, it did everything. So many divisions, making TVs, making the Walkman, owning music, owning TV channels, everything. And there's so much complexity. You had no idea. They had semiconductors. They've got a bank. They've got credit cards. Uncontrollable. And
there's always been that sense of quality, isn't there? Sony have always been, well, I mean, my perception of Sony was always a little bit more of the, I don't want to say premium, but it was always a sign of a good made thing, maybe than GVC or Toshiba didn't seem to have that same kind of stamp, whether it was just marketing or not, but Sony seemed to have that.
Just showing your age, Chris. There'll be young kids going, well, never heard of it, you know. Anyway, so at this point, there's a lot of kids today never. Is Apple Sony?
Oh, no,
Sony,
come on. Everyone's heard of Sony. If you've not heard of Sony, turn off now and leave.
Well, because of Sony records. Anyway, so George, who over the course of 30 years has met a zillion companies, he regarded this company at this point being on a par with his other worst meeting in the universe of his life, which was with Rangers Football Club in Glasgow.
See who's parochial now? Who's bringing it back to Glasgow now? See, there we go.
I'm just giving you reference points. I know you like your city. Anyway, so the interesting thing is, and a question for conjecture is: should you buy the worst company? Should you buy the worst company? Given this, George is a profoundly smart individual who has been a moneymaker for me and now for other people. And he's like, this is just a complete waste of time. And he at 750, and here we are at 11,000. Boom. Now,
so what are we saying? Are we saying George was wrong or George was right? What are we saying here?
We are. That's good. Thank you for putting me on the spot, because I don't know what we're saying. I'm saying. So what I'm saying to you is,
because it's went up a lot, hasn't it?
Yeah. So I saw in a lot of the feedback, can you explain your technique and the parameters, the rules and stuff? One of the things that we worked on was exploring avenues around and going through and into the heart of darkness, the heart of absurdity. Again, remember, my competition, my peer group were the smartest people in the world, attracted by these enormous remuneration packages of 2 and 20. And so I thought I had some sense in saying, it is just ludicrous for me to try and outsmart the smartest people on the planet. I'm not going to win. So try and work out the kind of kinks in the universe where just pure logic doesn't work. And this is an example of it. Pure logic did not work in gaining this advantage. Now, you had to take, and so stock analysis doesn't take you all of the way. And actually, one of you had to take it on promise, but it's a promise which is being delivered. It's a promise which continues to be delivered today, which is why we are laboring this point. The thing that was changing was, forgive me, Kuroda-san. Kuroda was the prime minister of Japan. And I wonder if you would never remember Japanese prime ministers, except Kuroda. I'm sure it's Kuroda. People, I'll correct this if I'm wrong on the comments page. It's not Kuroda-san. Let's call him Kuroda-san. Kumi-san. Anyway, he looked like Elvis. He was a Japanese Elvis Type in for me, Chris. Japanese prime minister looked like Elvis, and we'll just confirm his name.
Junichi. Again, I'll have to pronounce.
Just the surname. Koizumi-san.
Koizumi.
So
Koizumi.
We add, in the Japanese convention, is you add san, that's like Mr. Koizumi-san, forgive me. Koizumi-san was a rock star, and he came in. In fact, actually, do you know, I am right. It was not. Koizumi-san was before that period, forgive me. It was, he was, so again, tell me, Chris, Prime Minister 2013.
Of Japan.
Japan.
Right, here we go.
Abe. It was Abe-san. And Abe-san had been he's part of the furniture, the institutional furniture. His father had been prime minister. He'd been prime minister. He'd been kicked out under some dodgy dealing, and then he made a comeback as the system kind of the empire kind of the darkness descended. Except the darkness descended with a promise of making Japan better. And one of his things was he had these three arrows. He was like Robin Hood, and he had these quivers, these things he was going to fire to resuscitate this dead monster, which was the Japanese economy. And one of them was corporate governance and shaking up Japan. And from that, and we were there partly because of this promised shake-up in the land of the corporate zombie. And we were there obviously because we were reviewing short positions. But it just shows you that that promise has come good. Let me share the screen back again and go back to the chart. That's really, so Sony listened and they shook up and they simplified and they shone transparency and they got rid of all the mediocre businesses and they were left with a stable of like media, really, really good media assets. And these media assets, of course, back to the original question, have just boomed and blossomed under the lockdown as people are gaming and everything else. And we can take that, let's take that 2 steps further, because you can also see that shake-up in Hitachi. Did you mention Hitachi? Oh, no.
Toshiba, I think I said in GVC, they were the lower quality of the market, in my opinion.
Hitachi is Hitachi is a monolith, is a giant name of the scene in Japan, and big in it spent so much money at the wrong point in history on nuclear power.
They do that,
assets.
Don't they? Yeah,
they do. They build power stations, big turnkey projects. Now let's do 30 years. The corporate governance, appalling. Like return on equity, they would know what you're talking about. And so again, if we go back into that, actually 2030, so Sony was on its ass, and this thing was at 2,200, let's say, and let's say it's doubled since that. So Sony has gone up 15-fold almost, and this thing has doubled. But if you've been following the news, you'll know that it has been subject to something unprecedented. It's been subject to a takeover. And a takeover with credibility, a consortium of private equity are looking to buy it and break it up. And there will, like Sony, there will be diamonds in the rough. And normally you would expect Japan to hunker down and prevent that. But these changes are taking grip within the land of the zombie. And to demonstrate that, they've come in and they've fired the chief executive as a kind of a first defensive move to say, okay, right, we hear you. This guy's a complete clown. Boom, gone. Now they could just replace him with another clown, but we'll see. They haven't. It's still, this is in play. And then you see this point. You say again, I'm a big one for these charts. So actually, if you were to turn that upside down, what you would be seeing is what we call an inverse head and shoulders. They're captivating because they're easy to identify, but their easiness makes their potency less. I want to say no more than 3 out of 10 head and shoulder patterns. Yeah, I look for patterns. Nature is replete with patterns, and I would say that the potency of this pattern is very, very poor. But nevertheless, let's discuss it because I don't think you'd be familiar with it. So this, if you will, would be the outline of a shoulder, Chris.
Yeah.
This is the outline of the head, and this is the outline of the second shoulder. And so the idea would be when you breach the neckline, if you will, of the shoulder pattern, that you should this distance here, which is, what did we say? This is, let's call it 11,000, let's call it 1,000 to 5,000. So that's 4,000 points. The argument is that if you can sustainably push the share price above that, and how do you do that sustainably? The news flow changes, and it's starting to tell you we see a new, more prosperous future for this business, which would be the rationalization and starting to run it on behalf of the owners. Then you would expect to add 4,000 Japanese yen points to the share price, which would take you to 10,000, which would take you to the top of that chart. And then if you took out that, which is this high from that's when the Nick 1999. No, it's not when the Nikkei was at its all-time high, but clearly that's 22 years ago. The argument would be then you would then double that level, which would take you to 16,000. So, if I was professionally running money today, I think I would have a position there. And then finally, to close this chapter down, probably the worst managed company today in that corporate titan land of zombies is Nissan.
All right, okay.
Nissan Motor. So let's have a look at Nissan Motor. And again, forgive me, because I should be. If you're listening on audio, it's like, oh God Almighty, really, I can't see it. But if you are, please, thank you so much for listening, and we would welcome you. And maybe we should do a chart pack for these, and we'll send them out and we'll post them. I should really be doing things on my hughhendry.com thing as well.
And also you can leave any comments, questions at the bottom for Hugh and things like that. Comments, abuse. We're open to all that. Compliments. You know what I mean?
So thank you, Chris.
For both of us, we can feel free to abuse both of us.
Yeah. So this is a lot of data. Is it 30 years? I'm not sure. It's 1993. I'm not sure why they don't give us more data for such a large company. Sure. Let me just again. So again, if you're listening and imagining, this is a stock that has gone sideways since we're looking at it from 1993. It trades today. It trades at the same level as it did in 1993. And I want to say that over that same period, probably the Dow Jones Industrial Stock Market has gone up at least tenfold. So,
but it's been on a hell of a journey. This stock's.
Well, remember, so the hell of a journey. We see an immense decline, which is the 2008 watershed moment in all financial markets. So it kind of gets a pass on that. Prior to 2008, it had this Carlos Ghosn, this kind of guru of the motor trade, who now, had to flee the country, and his reputation is being questioned, but being questioned by others, not for us. But this is cast adrift from this world where most businesses are rising, and I have to say, I'd be intrigued. Why would I be intrigued? Because I would go like General Motors is hardly. Is hardly a poster child for great American enterprise. After it got bailed out by Barack Obama after 2008, we were just looking at the devastation in the Nissan price after 2008, and after then, it was referred to as government motors, GM, because the government had to take such a large slice to keep the business alive. And so I'm just bringing GM up, and I'm putting that onto this kind of 30-year price point. Look, GM is a screaming buy. I've never said that in my life. Government motors is. You see again this why my fixation for patterns. When a price has been the levy of a major price ceiling, if you will, a company has just been unable to have the creative, entrepreneurial, industrial genius to kind of promise and deliver on a more commercially viable and interesting and a future. And so it's always been capped. And in the case of General Motors, kind of $40 or so was always the high point. And that's, again, this data is disappointing because we're looking at a chart really from 2011. So the price of General Motors, the high point was about $40 in 2011. And it got back there in 2013. It got back there in 2018. And it's just surpassed that. It surpassed that level about 6 months ago. And it's now trading at 58. And again, the general rule of thumb, would be break that level and you double. So that would be taking you to 80. And then we would pause and we'd reflect again, and we'd look at the future. We'd analyze the company to consider whether this thing could continue. And we know what it is. They've made investments in electric vehicles, which are showing promise. I think they actually won, Chris, a big contract to run an autonomous fleet of taxis in Dubai.
Oh, right, okay.
Yeah. And so there you have it. I think why don't we, given this fixation for?
But that brings one. Can I just ask you something very quickly before we we'll come right back to that, just about cars, because Tesla have just announced that they've had their first 3 months profit. So everyone's probably thinking, great, jump in Tesla. They're now turning a profit. It's all good. But it turns out that 10% of the revenue, 100 million of the revenue came from selling 10% of their Bitcoin. They've also received 518 million for their selling their emission credits. So is it really smoke and mirrors, or have Tesla turned the corner? Because last year they made 16 million in this period of time. So it's jumped up by a big amount, but the emission credits alone wipe that out.
Yes. Well, several things. I want to keep this short.
Just because we were talking about cars, I thought it's that linked in from General Motors to this,
No, absolutely,
Yeah.
absolutely correct. I want to say, first of all, to those who approach the art, and it is an art, it's not a science, of investing and speculating and seeking to expand your capital, people sometimes are always incredulous as to how little consideration is given for reported earnings. Earnings are flim-flam. They're storytelling. They are subject to assumptions and conventions and principles and the dominance of a chief executive and a whole host of factors. Most people, most professional investors would be doing a deep dive into the cash flow of the business. You can't lie with cash. And you've got you've got a balance sheet with two dates. And so that's, you've got two photographs of the bank account. You can see how it's changed. You can go into the cash flow statement and you can actually see the interest earned or the interest paid on either the cash or the net debt outstanding. You can kind of look at that figure. And if it's way above or below prevailing interest rates, that probably suggests that the balance sheet date is a date which is not representative of debt levels or cash levels. And of course, you look at the cash flow statement and you see how much free cash that could actually be withdrawn from the business without impairing the business. And then you would use that as an investment metric. Profits and the profits that companies report and the profits that Financial Times and Wall Street Journal and all these financial publications cut down trees and write stuff about. It is unimportant. Okay, so that's my first point. The second point, and I'll make 3 points. The second point is, to my mind, the most notable was that there was Elon, trumpeting his purchase of Bitcoin, and how Bitcoin was, it was heading to Mars, being Tesla, and no more than 3 months, and within 3 months, he was selling it. He was not selling all of it, but taking profit. So, word to the wise, this is all a game, folks. Make sure you're not the one that's being had. Okay. And then lastly, the point I wanted to make is, I know good, smart, intelligent investment folk, and why, Chris, why they get caught up in imposing an intellectual narrative against this thing. Look at this trend. Astonishingly powerful.
We can see General Motors, by the way. Sorry, you can maybe see Tesla. We can see General Motors.
Okay. Why does that happen? Okay, stop sharing and let me go back in. Well, share screen. Why does that happen? So you can see General Motors. I can't even find General Motors on my phone.
We can see you now.
You can see me now.
Yeah,
what can you see now?
Here we go. We can see the Tesla chart, people. It's up now. It's up now. There we go.
So from a price of $36 in March 2019, 2 years ago, right? $36 to $900. Okay, and all the way. This thing has been subject to professionals shorting it. And again, they would come out with this diatribe about these profit figures being fictitious or otherwise, and the valuation. Nothing in the universe of sanity matters when a stock is trending. Okay. When the trend, and you can see, well, hey, maybe they got it right because we had this immense waterfall decline. From $200 to $60. That's just in keeping. If you got it, this is. I'm going to say something which sounds unkind. I don't mean it to be unkind. This is a bubble, and bubbles are to be welcomed if you are a moneymaker and you are emotionally intelligent and in control and you understand the landscape. I'd be worried about Tesla if it was to break kind of $500. That would be the trend being under duress. And at that point, I want to know about intellectual narrative, and I'd want to know about the flaws or otherwise in the profits and the constitution of the business. So that's Tesla.
Great stuff, great stuff. Well, 2005, Hugh, so take us back to that. So today, we left you last time, we're going to talk about banks today. So you were keen to pick up on that.
Well, do you know, I haven't even read the monthly of Jan. First of all, it's such a joy to escape the dullness of the letters in 2003 and 2004, and I do believe we are entering into a period where my investment gains moderated somewhat. We're still. I think this year actually ends up being a pretty good year. Don't want to give anything away. But I was finding my pen and I was writing. I was getting more curious and more kind of risk taking in what I would say. But I believe, and correct me if I'm wrong, Chris, but
you start the year with a quote. You start the year with a quote from Graham Rabbit. Can you remember the quote you use?
Oh, but I know the context. Okay, okay. Tell me, what did I say?
It's so hard when you're living in the devil's playground. That was your first line of your 2005 monthlies.
Ooh, there's a lot behind that statement, and I have to be very, very careful. What can we say about that? As I nervously itch my shoulder. So if we go back to last week's installment. And if you remember, I was telling you how I was inching out and away from the auspices of the partnership and the working relationship that I had with Chris Sweeney. And I meant him no disrespect. If anything, I was saying that I was a parasite that had been feeding upon my host. And I was beginning to feel, so I joined in April of 1999, and here we are almost 6 years later. And I was beginning to think that I had consumed the entirety of my host. And it was one of those things that I had to consider leaving and setting up my own shop. And and again, out of no disrespect, I mean, I gained the education of a speculator working in close proximity to Crispin. And that comment, it's hard playing in the devil's playground.
When you're living in the devil's
living. Yeah. Crispin at that point was the devil.
How did he take that? I mean, did he?
He didn't know. He had absolutely.
He must have seen it, surely.
He had no idea. You know, the Graham Rabbit was a great song.
No one in the office went up to him and said, "Hey, have you seen this?"
You would get. It was just some US indie band that I was. So there was there's a KCRW have, and you should check out their app again. They should be sponsoring me, but they have this wall-to-wall Californian radio sound, and it's called this. I think it's called Sounds Eclectic. So you can imagine it would appeal to me. But prior to that, they had this legendary DJ from Sheffield or something, and quite rightly, had up sticks, and he lived in Los Angeles, living the dream. Maybe one day I will do the same. And his music tastes were exceptionally good. And this band, they just rocked. And this thing just anyway, this is what I would go on to do. This is me putting my footprint on these monthlies. You know, I'm quoting obscure US bands, and there was an obscurity which kind of revealed. So why was it hard? I was finding myself more and more at odds and fighting Crispin, because in making me a moneymaker, he had established some rules, and we're looking at some of these rules, and we'll continue to look at these rules. Edinburgh was the finishing school for my analytical ability. You know, that whole diatribe I gave you on it's cash, it's not profits. Profits are narrative, cash is a fact. And then Crispin was saying, great, wonderful, now let's make money. Okay. So I was the speculation in my head at that point was, what if I spent less time arguing with the big man and moved on. So that's the quote. What did I do for the month, Chris? Do you have you probably don't have that data?
I don't have that data, but I will say that I will pull you up on something, because people, once again, we're raising that Scottish flag. Hugh's raising it up the flagpole, even though he doesn't want to. His stock insight for this month is Weir Group. Just Google them, people. Just Google them. You might be surprised where they're based. That's all I'm going to say.
Chris, I've now got my comfort blanket. My friends from Amazon were delivering today.
Are you going to smother? Are you going to smother me with it, or smother yourself?
Sure. Actually, the best thing is, look.
But
bubble wrap.
But I will say, but one thing I want to add to talking about your thing with Crispin, we'll generalise it out. In bands, musicians quite often like tension, because it creates everyone's on top of their game, everyone's sharp, everyone's trying to prove their point, and a lot of great bands. I mean, Oasis are a band that we all know that have had that. Fleetwood Mac had it. Does it help having a wee bit of tension in your office that everyone's pushing each other on?
Rolling Stones from last week.
Yeah.
I mean, Mick and Keith spent a long time and they couldn't stand each other. Probably still. Yes, and Crispin, God love him, encouraged confrontation and absurdity and most people couldn't rise to the challenge because he was such a formidable foe, but I could because I had a P&L and maybe I had a spiky personality. So yes. So let's hit upon your. Let's hit upon Weir Group. Weir Group. Actually, we've discussed the sausage condom maker.
Yes, Devereux, because yeah.
And Devereux hails from your city, the unmentionable. and Weir, to your point, is of the same affinity.
There we go. See,
and more than that, it was regarded as an upstanding leader in the small Scottish corporate sector. And back when I was at Baillie Gifford, learning my trade as a stock analyst, without a doubt, we were the largest shareholders. We probably had something between 11 and 16% of the equity. We had $3 billion under management, and this was a small entity, smallish entity, and not just that, but owing to the partners and the networking, it's a small place, and we always had to send someone like me. I would never be trusted. I would never be trusted with this gig. But they would send one of their outstanding young Oxford, Cambridge graduates, or better still, someone having come from Edinburgh University, who would, at the investors' annual general meeting where the accounts are passed, where the board's approved again, and blah blah blah, complete waste of time really. As the leading shareholder, they would take the microphone from the audience and read out a statement lauding and thanking the corporate governance of the business, and mic throw down and walk off kind of thing. They were they were pleased as chips. Now, I am going to dare to bore those listening on the audio podcast. I'm going to dare try and bring up the chart again.
Because it was your stock insight for this month. That's why we're mentioning people. Yeah.
And so what am I sharing, Chris?
You are sharing General Motors.
Perfect. That's what I wanted. Okay, so I'm now going to put Weir Group in there, and there we go, the Weir Group. Now, before it comes up, I want to say that so it makes valves and pumps, and they have an industrial application. More than that, they have an application with a specialist niche. Their real money-making business was pumps and valves for cleaning out and ensuring the functioning of mines. So it was very mines and the oil sector. So it was very much engaged with the commodity universe. And this is actually, let's look at the share price, because I think I can marry my comments with it. And let's hope we get some meaty data because that goes back in time. I live in hope. I've discovered the Florence market scanner.
Well, this market scanner does look a step up from bar chart. I mean, although it is subscribe only, it does look better, and you can see why you're paying for it.
Well, whilst it's subscribe only, you can get about 20 or free charts a day, so you don't have to pay for it. Now, so I was looking. So where are we? We're 2005. So we're here. Here. We really should be there for the fullness of my argument. But yeah, we are. We're here. So Weir Group is trading about 325 British pennies in the pound, £3.25, and the eponymous Mr. Lee was charged with reviewing it. So back at the time.
I was going to say, can you not mention Mr. Lee's nickname because he's got a cool nickname, or is that not? Is that not broadcastable? I've never actually met Mr. Lee, but I know he's known as Careless Whisper.
Now, which suggests that he's not to be trusted. I had this, and I don't think it's really cool. I had this infantile habit of changing people's names into things that made me giggle, and then using that as their email handle, if you will. And so, George Careless Whisper, George Michael, made me laugh. And then the weird thing is, my wife at the time was legal counsel for my business.
Well, she's still your wife now. Not at the time. It was your wife. Your wife was legal counsel. Yeah.
And to this day, it is legal counsel also, but
yes.
not for the dearly departed Eclectica. And somehow, just because she was in my system, my corporate system, but somehow Microsoft Outlook 365, whatever, has now pegged her as George Careless Whisper Lee. So when I send my wife emails, I'm sending it to George Careless Whisper. So make of that what you will. So I was manic. There I was. I used to walk around with this kind of metal pole, and I had, like we discussed, I was the I was the
centipede
investor. I had hundreds of positions, and I started buying Weir, and I had it in my portfolio, and I was bursting. So I'd always buy a little bit and I'd add to it, but before I take it to a material level where it could do me harm, I would give it to my intelligence corp, and George very much was at the fore of the intelligence team, and I would challenge him. I was like, I'm crazy, okay? I'm listening to voices in my head. And believe me, the voices in my head are telling me, I got to buy this. And I'm not sure why. Help me out. Or tell me, do not buy it. That was the challenge. And that was the equilibrium within our team. And it was impossible for George because at this point, as you won't see if you're listening only, but for the previous 10 years, and if the chart was to extend beyond it and before 1994, it would reveal that for about 10, 15 years, Weir Group had pretty much been, again, ceilinged, had been subject to this barrier, which was around somewhere between £3 and £3.50. Never surpassed that level. And when you did a review of the cash, it was well managed. It was well managed in the sense that its business it grew a little bit and they made acquisitions, but it was like 5-6% growth and they made 10% profit margins. And I think, Chris, in one of the previous editions, we did discuss this metric of price to sales, taking the cash or the debt and adding that onto the market capitalization.
Yeah, we did. You're right.
And so this was a kind of easier stock to value because without an abundance or an explosive growth rate, it was bond-like in its setup. And so you would pay one-time sales for a business growing at kind of GDP and making 10% profit margins. And sure enough, and because it was well regarded, like my anecdote from my Bailey Gifford years had revealed, it didn't trade on one times, it traded on about 1.3, 1.4 times, which is to say it was fully valued. And every analyst in the city had it as a hold. And so John's like, I don't know. It's like, I can't see how you make money. It's not like if we were buying it and everyone hated it and it was on 20% of sales, and we've discussed some of those opportunities previously, boom, yeah, I can get it. And I said to George, you don't understand. The voices in my head are telling me that oil is going to $100. Okay. And if oil goes to $100, their business is going to explode. Okay. And no analyst has the imagination to deal with absurdity. That was my franchise. The voices would say, yeah, crude is going to $100. Okay. And as we can, and you may know, you may not know, but this is back in 2005. And I want to say, I'm going to guess that the crude price was probably about $35. And within 3 years, it had gone up fivefold to $150. Okay. And look what happened. We Group went from 300 and at first protocol was 800. So 2.5 times. And then it went to almost 3,000 by 2014, which is to say it went up 10 times. That was my superpower. These crazy voices in my head that could, when I kind of flexed and stressed every sinew, I could sometimes get messages from the future.
But what's quite interesting is during this period of time, we got caught in a wee bit of a scandal, which is all of it's been cut in the newspapers. It's I'm not breaking any news out like that. They were found to be dealing with Saddam Hussein's regime, breaking the UN rules and all that kind of stuff, and they get fined. I think it was 13 million and another 3 million. But that doesn't, and that was in 2010, 11, there was fines. It doesn't seem to have really impacted the growth, which you would think people just keen to make the money then? Investors can sort of turn a blind eye to some of that stuff.
It would be absolutely, I want to say it would be absolutely insignificant. The volume of business, just from logic, I'm not really terribly familiar with that story, but from logic perspective, the amount of business that they would be accruing out of Iraq in that time period would be de minimis. It would be a big headline newspaper. I think we discussed that I was the person before going on TV. I was the person that would bore my family, shitless by just shouting at the TV. You're all morons. You're idiots. You don't understand it.
Yeah.
No, lie, wrong, immaterial. And I'm like, oh, please,
I just meant know the optics of it. Being involved in that, you thought would have more of an impact as a layman. Because Saddam Hussein was obviously pretty high profile dictator.
Chris, will we talk about OnlyFans?
Yeah, why not? Are you going to get your clothes off?
I will if you pay me.
Let me just send you over a $5. So
you have to send a heck of a lot more than $5 if you want to see me naked.
Mates rates, discount for friends. Your OnlyFans, if anyone's not aware, is a platform where people can essentially create a profile, a bit like social media, and you can charge for content, for pictures, for things like that. And it's quite a lot of Instagram people do it, particularly men and women that maybe want to show a bit of skin. But there is other applications for it, but it seems to be going very well. It's very popular with people. Some people can actually make a living, a complete and utter good living just from being an OnlyFans.
Yeah, well, I was intrigued because, folks, I'm putting more and more effort into these things, and it's taking away from some of my other commercial activities. And so at some point, I will have to find some means of monetizing. I know you're like, hey, F off you rich ex-hedge fund manager type, but got to pay the man. And so I was looking at
I'm the man, by the way. That's what he's talking about.
Pay the man. Pay the
man, yes.
And they reported results this week. And it's a private company, but they're clearly coming to a stock market near you. And made 300 million of sales and 50 million of profits. I think they take 20% of all the money that passes. And that's a segue into the fact I thought I would be very appropriate for that platform because I'm into porn in a big way.
Your wife's watching this, that's all I can say. He's in his family house. He's got 3 kids, and he's saying this in this house. There's no shame in this man. There's no shame in him.
and I wanted to share some of my porn with you.
Well, if you're over 18, if you're underage, look away now.
Look away.
If the parents are in the room, hit pause and pushed him out of the room before you close the door if you're under 18.
Now, Chris, what am I revealing, dare I ask?
Serious porn. We're seeing a Bloomberg AVR Dow chart from 26th of April 2021.
I.e. yesterday. So, of course, I'm all in jest.
Well, not yesterday when this comes out, but yesterday when we've recorded. Yes.
I'm saying all this in jest, but the serious point is clearly there was a fusion that went on in my mind, which was the genius of Bailey Gifford and their training my mind to analytically review companies, and also for another time, but they trained me actually at an economic level to dissect economies as well. And then there was Crispin and this finishing school, which was charts. And so the porn that I refer to, and we've given mention to it, is one of the things I would do is I would sit at home and I'd listen to Pink Floyd and I'd plug in a stock index. And so I thought I would recreate that for everyone.
But would you get, as a hedge fund manager, would you have some, I don't want to say the word minion, but would you have some kind of helper? I've just said the word minion after saying I didn't want to say that. And would you have some assistant that you were obviously paying to compile these charts, or would you do it yourself?
No, this was really easy to do off of Bloomberg. Really,
so you do it yourself, okay?
I mean, initially, and then I just got people to show me because I'd be at home and stuff, and I'd be impatient. So I've deliberately chosen the Dow because it's only 30 stocks, and I've got to manually kind of go through these things, and that is not where I want. That's the Euro stocks. Forgive me. And again, this is where, if you're listening on the audio tape, you're like, okay, you know what? I have had enough. Okay, I thought, I'm not on this for the porn. I'm on this for the dialogue.
But clearly, So the idea was Hugh would get these, and he would go home with an iPad, or he'd be at home, and then you would put on some music. And you would watch them almost on a slideshow thing, and you'd look for things patterns that you're looking for, but you weren't aware of the companies you're looking at, right? I mean, you were just more looking at the shape, and then you would look at the company next.
No,
is that fair to say? No, it's not fair to say. Okay, fair play. I've been shot down in flames once again.
Because I had 30 seconds, and so the stock. Would the ticker and the Bloomberg ticker would be there.
Right, okay. But it was more the shape, what I mean. It wasn't you were particularly looking for a particular type of company. It was more the shape.
And again, if I saw a shape, I could press pause and I'd be like, and I'd write it down. And at the end of the exercise, and that's what I want to do. I want to kind of go, let's go through this and let's see what we've written down. Now, are we seeing,
So anyone watching this, would it be an idea for them now to get a pen and paper and they can almost ride along with Hugh Hendry? And I know we're talking about porn, so let's just skip over that easy joke. Anyway,
if you're just listening without the visual, I honestly, you're up the creek without a paddle.
But if you are watching, if you are listening, if you're watching, it's very interesting. You take a pen and pad now, and you can note some things down and see if you corresponds to anything he's going to say.
So I hope, Chris, we're looking at the share price of Apple. Can you confirm? So. I'm clicking here and it says 120. Does that? Yep, perfect. Yep. Great. Okay. So this is Apple, and Apple is just one of the most perfect stocks ever conceived by man in the history of civilization. We probably never had a better company set up than Apple, and indeed Amazon and about 4 or 5 other companies. We live at a time where the stock market has the presence of pure genius, and if interest rates at the 10-year level remain anchored around 1%. I want to say to you with a rational and a serious voice that the upside or the valuation for this business is virtually infinity. There's nothing that stops it except the gyrations over the course of time. We looked at Tesla and we'd seen that it had zoomed up from 36, I want to say, to 300 and then corrected all the way down to about 100 before, on its merry way to 900. So you get these pullbacks, and we discussed that with Tesla, and we looked at gold, which has had a pullback now, and we looked at Bitcoin, and it's now had a 20% pullback, and its volatility would suggest it should have more, but we will see. That's a good point. So Apple just confirms all of that. We're going to be here all day, to be honest. I'm going to speed this up. The only point is a lot of these. Oh, let's continue. Okay, so Apple, great, but you know what? It's so ecstatic that it's not an entry point for me. It's presently priced at, these are monthly statistics, but about 135 US dollars, and it could rationally fall to 94, which is about 40%, and it would not emit a sell signal. That would just be in the course. That's how the universe responds. It has these pullbacks and then surges and pullbacks and surges. So for me, I really couldn't take risk with Apple, with my money or my clients' money today. Let's move on. This is Amgen, so that's a pharmaceutical stock, and that all that reveals is trending upwards, and it's less elevated than Apple. Now we're looking at American Express, less elevated again, trending upwards. I kind of be, I wouldn't dismiss that. I wouldn't have a huge position, but I could own that. Now we're looking at Boeing, and Boeing, as we know, with the fiasco with the 777 aircraft and these.
I think it was the 737.
What was it? I thought it was the replacement for the 737. Anyway, whatever. Which didn't work, and these fatalities, and Boeing, prior to COVID and of its own making, had fallen from the best part of 450 US dollars to 100. It had very much had its glitch. Glitch is something that can be fascinating, can be a great profit opportunity, as this is revealed, and it's now on its way back. And we can, again, if you were to see this thing, you can look where it bought. It finds a point. The point was the 2007 late high. It came all the way back to that level. It wiped out about 15 years of price discovery, but that's where it found a resting level. And today it trades 240. Boeing's probably a buy, a contrarian buy. And then we look at Caterpillar. Caterpillar. Mining, did we talk about the gold price? Have we talked about copper? Have we talked about, there's so much I could talk about in that space. When price, like Weir Group, when prices, these guys do the shovels, they're big shovels, they're mechanical shovels, they're diggers. And at the same time, we've got the US administration promising to spend $5 trillion, and a big dollop of that's going to be built on improving infrastructure. Caterpillar's at the present time has got a license to print. Only 2 companies dominate the industry. Caterpillar, fantastic, and Komatsu in Japan, outstanding Japanese company. So, can I buy it? No, I would speculate that I could buy it below 200, because again at 230 it could retrace to 150. So I can't take it. We're now looking at Salesforce. Salesforce. We've mentioned SAP before. SAP. Did SAP try and buy Salesforce? Did they buy a competitor? Did SAP have a competency in this business? Fantastic, surging. But the good things, it's had a pullback. It was almost 280, and it fell all the way down to about 190. That's what I'm talking about. I want to buy the apples of this world after they've explored these pullbacks. I'm now looking at Cisco. Cisco very much is an SAP, and Cisco I would buy. Look, it's on the launching pad. Apple, if you will, it's a rocket. You have that moment where the rocket and it's all boosters and they fire it, and it seems to be levitating on the launch pad. And then boom, it's gone, and you go like, where did the spaceship go? And you're like, oh, it's 5 miles above you, like that. That's Apple's up there. This thing, I can just feel it, the boosters, and it's going to go. Is it going to do what Apple did? Unlikely, but I'm happy buying that because of the entry point. I'm now looking at Chevron. Chevron is an oil stock, and we're saying, hey, let's be contrarian. We haven't been investing in oil. So the legacy of us getting green means that before 2030, we're going to run out of this stuff because we've disincentivized people to dig holes to find it. So that has not surged. It's not even on the landing pad, but above 120, you'd have to take that seriously. We're now looking at Walt Disney. Walt Disney is an amazing, one-of-a-kind, risk-free almost business. Again, it's too far beyond our risk parameters to be of interest. Dow has done a recapitalization, so we don't have much data. I'm going to ignore that for the time being. Now we're looking at Goldman Sachs. The squid. I never dealt with them, never felt easy dealing with them, never liked them.
Why'd you call them a squid? Why'd you call them a squid?
Because...
is that a nickname in the financial industry or something?
Yeah, I'm surprised as a journalist, Chris, you're not familiar with that. The squid, there was Rolling Stone front page had a big piece about Goldman Sachs. I think it was exposing the skullduggery that they got up to in 2008 when they learned, to their great shock, at least they learned, and they took it on, that they were wrongly positioned for the crash in the US housing market, and they switched their position. They had sold all of this insurance on bonds which were going to become worthless, and they faced an enormous liability which would take them out. And so quietly they set about selling that. Who did they sell it to? They sold it to their clients. Go figure. Like I say, never deal with Goldman Sachs, but I don't wish to say anything which is, otherwise it's an impeccable company, as the share price reveals. Anyway, but I have to say, for all, and my boyhood affiliation with your city, it would take me into Celtic. I bought Rangers. There are no bounds on what I will buy. I would buy Goldman Sachs. You see here, it took out the 2008 high of $210, let's call it. It should trade at 400, trades at 350, probably trade higher. So there you go. Let's move on. Home Depot, surging. We'll come back. Maybe if we find time, we'll talk about lumber. Again, one of a kind, COVID, people doing always doing home improvements. That business has accelerated, and they took out a number. They were allowed to take out their second largest competitor. They have a license to print money. Boom. Let's look at Honeywell. Honeywell surging. I don't know quite the Honeywell story. A little bit too advanced in its price projectile for me to be comfortable with. But I would be saying to myself, must know what it is, because I can't answer. And some of our people listening in or watching perhaps will tell us what is the magic juice of Honeywell at this point. Now, here's a stock I would buy. IBM. I would buy this damn thing in a world where everything is leaving our planet. Everyone's like, hey, look, the sun's gonna burn you've got a year to get out of Dodge City. The Earth is busted, and we're going to Mars, and all these ships have left. And I'm still packing my underwear, trying to put it in my case. This is a rocket ship, and it's still taking passengers. I would be very long IBM from that chart. I'm looking at Intel. We discussed semiconductor chips previously. This long and continuation sideways movement. We're looking at 16 years up until the beginning of 2018. It was trading at the high point in 1999. And then it surpassed that. One of the points that came out of the Tesla meeting, which is tangential, but it's close, is the shortage of microchips. Microchips vital in putting together these complex electric cars. So Intel, the granddaddy of them all, not as powerful a force as it was 30 years ago, but powerful enough to want to buy. So when it broke out of that 20-odd year range, it was 30, it should go to 60. Boom! It's at 60. So now's the point to reflect, to look at it, but I'm sure you could convince yourself to own that. Let's move on. We're looking at Johnson & Johnson, pharmaceutical company. Nothing wrong with it, trending higher. Safe company. Arguably, again, 1% interest rates for bonds, priceless. We're looking at JP Morgan. We've done, so banks are making new highs, okay? And we will reflect upon that later. We're looking at Coca-Cola. Coca-Cola, steady Eddie. It's a kind of riskless business, but it sells sugar, and I'm drinking tequila. I stopped drinking wine because wine's got sugar in it. So you can imagine I'm nowhere near Coca-Cola, and I'm certainly nowhere near what I call and I don't wish to be prejudiced. Well, maybe I do, but not commercially prejudiced to the company. But if you're drinking Coca-Cola Light, you're drinking the juice of Frankenstein. Okay, it says it's got no sugar in it. True. What does it have in it? Stuff that's not good for your body. I can't say that medically. I'm not trained and diligent or professional to pass comment, but that's how I interpret it. We are putting in substances into our body, which we've only been doing in the last 10 years. And again, I tell you, I'm such a Looney Tune, I wouldn't get the COVID vaccination because we have no history of inserting that compound into the human body. We do not know. I am a person that needs precedent. So
I'm going for the vaccine. We're 50-50 on this. I'm definitely vaccine. I'm telling everyone out there, get vaccinated. That's me.
No, indeed. And good on you. It's great that you have, it's good that we live in democracies where we have that choice. I hope that persists. I hope I am respected and allowed to exercise my choice. I have absolutely no issue with you taking it. I hope other people don't take issue with me not taking it. Anyway, moving on. Who knew that Coca-Cola could take us to COVID? So we're looking at McDonald's. McDonald's is a risk-free business, and McDonald's business was pretty much we had an alien invasion. Again, we're back to COVID, and McDonald's didn't notice their takeaway business. The drive-through, boom. Okay, so at 1% interest rates, it continues to levitate higher. Let's go again. Here's a stock, 3M, an industrial bellwether of the economy. Has not been levitating. This is a business which has upwards of 90% of its business, which is risky, is subject to the vagaries and the contours of the economy. The world for the last 20 years has been subject to modest economic growth with these vicious events like 2008 when the banking sector was bankrupt, the invasion of the COVID into our system, etc. It's been very, very tough. So, but if we're going into a world where we seem to be going into a world just now where, again, policymakers saying, nah, look, we got your back, we got you covered, your risky business, no problem. We're putting so much money into the system. 3M's not a, if you're playing catch up, it looks like a more secure entry into the stock market, but you're having to adopt risk. Okay, but you're having to adopt a different risk with the Apples and the Johnson and Johnsons and the Disneys. The risk that you're adopting there is that 10-year interest rates will remain saddled at 1%. So you are taking a risk, just a different risk. Let's continue. We have Merck, another pharmaceutical company. Boom. What do we look at? Microsoft. Wow. I mean, Microsoft has left the universe. It has surpassed the Mars. I don't know what the planet next after Mars is as you progress through the solar system, but astonishing. What can you do with Microsoft? You can just, if you're envious of owning it, you could buy a tiny amount. The smart move, I think, would be to wait for it to have a 20-25% correction. It will. And that's no slight on it. It's just, again, the kinks in the universe. We are now looking at Nike trainers. Nike is, again, close to being a risk-less business. So the only risk you're taking, funnily enough, when you're buying trainers, is the risk you're taking, or the manufacturer of trainers or branded trainers. The only risk you're taking is that 10-year US treasuries will remain at 1%. We're now looking at Procter & Gamble. Again, it's a 10-year treasury risk that you're taking. We're now looking at Travelers Corp. Travelers Corp is a giant US financial stock. Nothing much to say. Looks fine. It looks fine as a buy. We're looking at United Health Group. United Health Group is an insurer. So Obamacare and everything else, I'm not an expert on it, but clearly the healthcare insurance policies for Americans are a goldmine to United Healthcare. There you go. And now we're looking at Visa. Visa is, again, I want to say one of a kind, but then you shout MasterCard. You should own Visa. Who uses cash? I haven't touched grubby cash in the longest time. It's all on my, my tap. Okay, and yet all of my transactions. So I'm making credit card transactions. Okay, those transactions with my phone. If you're smart, you're saying that is Apple. I still think Apple may have to pay Visa to clear part of that transaction. Probably the other side are using Visa. So they make every time you spend money, boom, boom, boom. These guys make money. And secondly, we discussed, what was the stock? Remember those two Irish boys who've got that credit card processing business, Chris?
Oh, yeah.
The name doesn't matter, but it has a fantastic, it's more highly rated for the point of its development than Facebook was, yeah? Guess what? Visa being in that system, it has equity stakes in everything. I can't say this definitively, but I want to say they will almost surely have a stake in that business. Okay. Stripe.
Yeah, that's it.
Thank you very much. Thank you very much. So where are we? We're at Visa. We must be at the end. Verizon. Verizon is the largest. I want to say between Verizon and AT&T. These are the fixed. These are your British telecoms, your Deutsche Telecoms, and trending in a more subdued fashion. What I do know about Verizon, and I'm amazed. I no longer manage money professionally. I build houses in St. Bart's, but you show me some porn and I get stimulated and suddenly I know stuff. Where does it come from? Where does this stuff go? I don't know where this comes from, but Verizon has a bucket load of debt. Now, that goes two ways. Gets its act together and is not subject to reversals, then the equity is like, it's like buying a house. You put down 30% of the equity. So you buy $1 million house, you put down 300,000, the bank puts down 700, you sell it for 1.5 million. So you made $500,000, right? But you made $500,000 on 300. Let's see, you sell it for 1.6 million. You've made 100% on your equity. So it works that way. But they have a staggering. Have they got $150 billion of debt? Question mark. Not fully on it, but I think it's the largest corporate debt load ever accumulated. So you could make a lot of money, or it could go to zero. And Walgreen, again, limited data. Walgreen is and Boots are. What do I want to say, Chris? I want to say they're retailers for
pharmacies, chemists.
Yes, pharmacies, and that is a great business. Put together with a lot of debt and then had some reversals. I think that's probably a fantastic business. There's not a lot of data there because Walgreen was acquired by a private equity venture and then kind of reverse engineered into Walgreen. My suspicion, hunch is that's an amazing, impeccable, one of a kind business in the midst of a glitch, and I'd want to own it. I'd investigate. I'd have my smart guys looking at it and saying, guys, I've got a niche. I want to really buy that. And as we get to the end, Walmart, one of a kind business.
But they've jettisoned their British big Asda, haven't they? They got rid of that. I don't know if that makes any difference or for interest.
It does, and you're right in that sense. In that,
because we don't. Anyone listening outside of Britain, we don't have Walmart. We have Asda, which is basically Walmart in Britain,
and others.
Yes.
And they sold Walmart for next to nothing, and they sold it to a group of two Indian brothers.
No, Asda. They sold Asda, no Walmart. Sorry, you said.
Yeah, of course.
Asda, yeah. We've got Asda. They sold it to a guys that have a load of petrol stations. They're kind of petrol station tycoons,
which is extraordinary. So they tried the same expansion in Japan, and I want to say that met with similar mediocrity. So the valuation of Walmart is bounded. It's more of a linear function in that I want to suggest that, let's say, a food retailer, a really, really cracking food retailer should be making 4, 5, maybe 6% operating margins. This thing should become more and more bounded by GDP growth, so nominal GDP growth. Let's be generous and say 6%. And kind of that thing, and then it's well managed. At that scale, there's no one really against it. And so it should trade on, a generous valuation would be 70%, 50% of sales, and maybe it trades on 75, 80%. Maybe it trades on one-time sales, but above that, really kind of hard. I'm not sure. I'm going to check on what the price to sales.
I mean, it's also what you can do, but in Walmart. I mean, I've only been at Walmart in Canada, but I mean, you can get your hair cut there. You can get a McDonald's. You can buy all sorts of clothes. I mean, I bought swimming trunks, swimming shorts in Walmart.
Yeah.
I mean, you buy all sorts of stuff there. It's just it's like an emporium for everything.
Well, they took out food retail. All the other food retailers, their prices kind of went to zero because it all went to Walmart. I mean, I'm exaggerating, but and so you won that battle, and you've got to pick new battle. It's Amazon. It's the same thing. You've got to expand your footprint. Talking of Amazon, the acceleration in that price is that they acquired an online presence, so they acquired the know-how, if you will, to deliver on scale, with the scale of Amazon. And so that may allow them to re-engage globally because they have the enormous advantage they have is their size, and so that they are able to get lower costs and therefore lower prices, and therefore that in a world of tough economic conditions, that is a bonus. So that's something which may allow it to escape the confines of that kind of linear price to sales or enterprise value to sales that I was mentioning. So I think that takes us to the end of that. So you see, it's revealing, and I'm not. Tune in next week, folks, and we will be looking at European porn, a bit of German porn, which is all.
We've just using a porno session with Hugh Hendry. That's I mean, you know, not often you get that for free, is it, Hugh? That's usually it's usually an invite only for that one.
It's usually only fans. Now, we should wrap, but I recall a message from the past. I remember myself speaking to me from a week ago and making a promise, which was that we would discuss American banks. So we did, if you recall, there was JP Morgan, there was Goldman Sachs. Surprisingly, so Wells Fargo is not in the Dow Jones. That's interesting. I didn't know that. And they are trading higher. And then at the same time, and I'm going to try and share the screen. Why would I take such a silly task on? But I'm going into there we are. I don't know what we see. I'm going into, I'm trying to bring up the Financial Times. Oh, that's something I prepared earlier. Let's hit two things. What can you see, Chris?
Millennials. Far fewer US millennials are earning more than their parents at the same age.
Okay, so this is something I did want to. So this is not the bank story, but I had this saved for discussion because this is worthy of consideration. This explains everything. Explains the rage, the white hot fury that is deservedly festering within our society, and especially in Europe. This is the thing that says to me that Brexit was not a one-off. The system has to reject not only the European Union, but the whole edifice has to tumble, both in Germany with its ridiculous fiscal balancing in a world where 10-year German rates are negative. It's ridiculous. But more than that, what I want to draw your attention to is here, right? So prior to COVID, right? If you can imagine prior to COVID, and COVID's pretty obvious, boom, down, okay? And what this is showing, it is showing the employment rate of young people aged between 15 and 24. And in Canada, that rate prior to COVID was pretty kind of constant and around about 60%. The UK, you know what, for the last 5-6 years, touching distance of 60%. The US, less, about 50%, but half of those aged 15 to 24 were in employment. And remember, a lot of them would be students and not in employment. I don't know what percentage, but a significant number. Now let's go into and even Japan, which they tell us Japan's a basket case. Almost 50% of kids in that age group have got jobs. Now let's go into the dark funk of Europe, right? France, less than 30%. Let's go to Spain, right about the low 20s. Let's go to Italy, right about 15%. That is beyond grotesque. What are they doing? What are these policymakers? They are asleep. And one of the things is, and let's hook it back to loans. You have to amortize loans. They have taken interest rates to zero. They've taken interest rates to negative levels. But they have the European Central Bank, again, like Atlas, supporting collateral values for banks. Say, guys, it's okay, guys. It's okay. We got this. Don't worry about risk. Lend the money for nothing. Okay. But the banks are not getting the message. Right. And the bank's like, okay, fixed rate, cool, 20 years, cool, 2%, bit high, should be less, but fine, cool. But I've got to repay 5% of the loan every damn year, right? So my interest cost is 7%. I can't operate at that level. I can't employ 15 to 24-year-olds. It's stupid. Europe has to change. And because of that, bank loans bank loans in America over the last 10 years have grown, not explosively, but they've grown kind of GDP-like, 6%. If you look at France, nothing. Macron, I couldn't conceive of him winning the first time, so I've got bad form on this. I can't conceive of him winning because he's just come in and demonstrated he's a blinking idiot, right? He tried to reform pensions. So the economy bank loans are not growing, which means the economy is not really growing. And then he comes in and says, aha, I am Margaret Thatcher. You get paid too much of a pension. You retire too late. I'm coming in. We're changing all that. And people are like, what? And the 15, 20, like, what? Right? So what you have to do is you have to encourage the bank system to lend, create economic growth, make people prosperous, and then try and do a Thatcher. Anyway, long diatribe. What I was trying to find, but I think a worthwhile.
No. I mean, the figures are shocking. I mean, it's
aren't they shocking?
I mean, I mean, Spain, Italy, and France. I mean, it's bad enough in other places, but they are very low.
Very low. And so I don't know if can you see today's edition of the Financial Times?
Yeah, we can. Yes.
Yeah, and so I'm going through it. I'm trying to find again. I'm trying to throw light on how the newspapers report. I think today or yesterday they had here's an example. U.S. post-pandemic boom overcomes. So the boom is overcoming volatility fears. There was a better piece which I'm looking for, so it's not there. There was a piece in yesterday's edition which was saying, it's good, guys. It's really, really good, really, really good. But maybe that's a problem. And look here, we're
OnlyFans, yeah,
OnlyFans. So I do read the paper, and I think. But I'm looking for prejudice. This article on lumber, we don't have time. I promise you we'll do that next time. And I still can't find that. That's boring. Okay. Anyway, so I'll stop sharing. They were saying that, hey, inflation. Coca-Cola is raising prices, passing it on to consumers. Procter & Gamble raising prices, passing it on to consumers, etc., etc. Inflation is coming, guys. Inflation. Remember, the big risk when we looked at the Dow Jones, everything is levitated. The things that are leaving our universe of safety are these things which really the only risk is the 10-year government bond yields go higher. That's the only risk. And so the newspapers say, guys, watch out. Interest rates are going to go higher because we have inflation. Okay. Why is that not the case presently? That is not the case presently because back to this point about US banks, about a week to 10 days ago, US banks started reporting their first quarter results. Now, we did see the chart of JP Morgan and it's a buy. But in the first quarter, their deposits were up 24%. So this is what we know. People are in lockdown. They're getting checks from the government. They're still being largely getting paid. In the UK, what do we call it when you get that? You're not working, but the government pays you money. Furlough.
Oh, you are working. You're not able to work because your business has been shut down. It's not.
The government's closed you down, and the government pays you. And in America, it's called PP&P. This is the equivalent, right? So people are getting their savings are going up, okay, and so that's why deposits are up 24%. That's why when people look at metrics like money supply is surging because it measures deposits, and the idea is with those deposits, banks, these are liabilities. A bank really doesn't want your money because it's like it doesn't have to pay much out on it today because interest rates are so small, but collectively it's a liability. It's got to pay you back that money. It's like, oh Jesus, like more money. And like in the last year's just gone up 24%. Like, God, okay. So there's a great incentive to make loans because you make loans, you make money. You take risks, but you make money typically, yeah. So let's talk about loans. Loans for JP Morgan. And I said, yeah. Loans for JP Morgan fell 4%. So they're like, the government's throwing money at the economy, the stock market's surging, inflation's coming, so 10-year rates are not going to be good. Surely that's an environment like, crikey, let's make loans. No. They actually contracted the loan book, right? You will not, my promise to you, Chris, you will not see inflation until you see banks lending and lending at a rate which is faster than we anticipate the economy. So lending at a nominal level greater than 6%. When they're lending at 10% plus, we will get inflation. But in this environment, it ain't going to happen, which is to say that those priceless securities like Apple will retain their levitation until the bank loans change. I mean, Wells Fargo, which is, I think, maybe the second largest bank, very, very large domestic US banking franchise, their loans fell 15% year over year in the first quarter. Now, there might be some funnies in there, but that's not the environment where you're going to have inflation. So God knows how long that was. I know we got some great feedback and you all said, hey, listen, stick with it. I missed that point that actually you dive in, you dive out. No one, I mean, who knows how many people listen to Joe Rogan for 3 hours. You're brushing your teeth in the morning and you press play. I hope that's the case. I hope we haven't bored you.
But we've also got to thank one of our listeners, Keylink, for giving us We've got the Bloomberg. What is it? The Bloomberg abbreviation. What do you call that again?
The code. So that would be the trade. What is it? The Bloomberg code.
The Bloomberg code.
You type it into your Bloomberg terminal.
We're all set. IDRU. Does anyone have any ideas out there? Because Hugh was off on the Indonesian currency for a while, weren't you, Hugh? Well, you were off on the Indonesian rupee.
Well, I do need a pee actually, but I was, and so let me see if I can. So are we looking at the comments page?
We are, yes, we are. Keylink USA. There we go. 3 days ago.
And so this was on the Doom Loop edition, and so very. I love these comments. People, forgive me if I don't respond. I try and respond to as many as I can. And he wrote in IDRU. And I thought, IDRU, okay, let's put it into the Bloomberg or into barcharts.com, so to speak. And I couldn't find it. And I was like, IDR, that rings a bell. That's the Indonesian rupee. So again, let's do that voyage of discovery. If I do, will market screen will work. Let's go USD. I don't know if it's good on currencies. It doesn't. Let's take refuge in bar charts. Again, guys, why are you not sponsoring me? I am USD IDR. There we go. There's the US dollar versus the Indonesian rupee. So this all stemming from the comment. This is me retracing my steps, and I'm like, oh, this is really, really interesting. The chart formation starts again. My voices are winding up. And they're like, something's going on here, And I start calling my old buddies, like, talk to me about Indonesia. And they're like, Indonesia? No one talks about Indonesia. What are you talking about? Like crazy old, go back to the beach and stop boring me. I'm like trying to make money. And then someone called me, like, they did say that, but they always come back nicely. And they're like, the rate's really low and they're just gangbusters. And like, if we go back, and I'm going to find out next time, I promise you, I'm going to tell you, I'm going to look at the largest listed Indonesian bank. I'm going to look at their year-over-year growth rate in bank loans. Really booming. They're trying to emulate our friends, our Icelandic Vikings, if you will, in the world's largest Muslim country, populated country. So what we see is the Indonesian, and I'm only looking at this from 16, the Indonesian rupee, when it goes up, that's it weakening. So that it was, and I don't know the catalyst there. It may have been Jodo, who's the prime minister. It may have been fears about his re-election. He's popular, and then he was re-elected, so we came back. But this, in a world where all of those, I want to say 90% of those Dow Jones stocks were elevated, and there was a substantial risk that at some point volatility will what I want to say will go higher, which is to say there will be a disturbance in the force of the universe, and we'll have another 20% correction in stock prices. I want to be long volatility. I can't go long volatility by buying volatility futures because it's already priced much higher. It's every day I own it, I'm going to lose money if nothing happens. Indonesian rupee, given that they've got interest rates very low, so typically, I was saying to you, Iceland would run 5% interest rates when they were 0 in Japan, 1% in the US. When they were 5% in the US, it had to run 14, 15, 16%, and it blew up. Okay. Well, this is like Iceland back in the day. Interest rates are only, they're very modest. So the idea that I can be short this, it's not a punishing short. I'm not paying a lot of money to take on the volatility. So that if I was looking to hedge my equity book, I would, yeah, a PA investor, believe me, I think you really struggle to be able to short the Indonesian rupee. But in a hedge fund, that's kind of something you can do.
But the irony is that this had nothing to do with the Indian rupee, and you had been off on this sort of not wild goose chase, but a sort of slightly a fool's errand, shall we say?
Yeah. So as we see, I'm like, hey, that, great idea, thank you. Great, interesting chart. I want to know more about it. Talking is like, what are you talking about? Indonesian rupee is like, it was the idea for you, because we were saying I was going to launch a fund. I was going to call it risky, and he's like, stands for I dare you fund. And I was like, oh, but that in itself shows the genius of global macro, that it's Alice in Wonderland, and from the weirdest impulses you can create investment ideas, and that very much, I think that demonstrates everything about what was my hedge fund career.
And remember, people, we will dare you to listen to us next week. We will be back. Hugh will still be in London, and we'll continue on the discussion. And I think we'll just leave you. Remember the wise words of a wise man: it's so hard when you're living in the devil's playground.